Hi everyone, it is day 6 of our 90 Days to Taxes series where we are taking new business owners or business owners that are not organized and we are getting you ready to file your taxes in 90 days. And day 6 is all about how do you pay yourself in your business? How do we take money out of a business? How do we put money in as an owner? What does that look like and how is that taxed? Are there tax implications to that? And the answer to this is different depending on how you are actually taxed as a business. So sole proprietorships look different than partnerships, which look different than S Corps and C corporations. So each tax treatment for day 6 has a different video where I am going to break down a couple of different things. One, how do you put money in the business in order to invest in that business, contribute to that business? Two, how do you pay yourself for the work that you're doing in or on the business? This looks different depending on how you are taxed. So I'm going to go over how you actually pay yourself. 3, I am going to go over how you pull money out. So it's not just about how you pay yourself for the work that you do in or on the business, but how do you pay yourself from the business's income? Right? So we have payment for the work that we do in or on the business, but the business may hopefully realistically earn more money for you than what you would compensate yourself with normally. So for the work that you do, hopefully you're earning more than what you would earn in a W-2 position doing the same thing. How do you pull those funds out of the business? Because we separate those two depending on how you are taxed. And the treatment of those two can be different depending on your tax treatment. And the way that we structure those and what is most beneficial for you as a business owner is going to be different. For example, our S corporations, we want to have a lower W-2 wage than we do in a C corporation, because S corporations, those W-2 wages are subject to FICA taxes, which our S corporation is eliminating some of that FICA tax, whereas C corporations, those wages are still subject to FICA taxes, but C corporations are subject to double taxation. So we structure these things a little bit different, and we need to make sure that the way that we're structuring them is in line with the Internal Revenue Code. So in other words, I have videos in our 90 days playlist, our 90 Days to Taxes playlist. I have videos for each way that a business can be taxed. Those 4 different tax treatments. There's also a master video that kind of tells you a little bit of overview about what we're doing for day 6. So go ahead and check those out. Let me know if you have any questions, and I will see you guys tomorrow.